Here we go. Marcel Klinovic, Boss Blunts here. Tomorrow is September 9th, 2021. We're going to have a little live stream to talk about supply chain. So if you're tuning in and this is pre-recorded for you and not live streaming, please fast forward maybe about 8 or 9 minutes. I'm going to let some people join in here and share this on Twitter and other places. Got to drop a couple hashtags, let the homies know what's going on, because we've got some fun stuff to talk about. Might as well throw myself up there. What's up? I could share this as well. Why not? What's up, fam? Who wants some? I'll roll one for you. We're going to see if anybody feels like joining us. If we don't get more viewers, we'll get started, but I figured I'd wait about 5 or 6 minutes. This is a little YouTube mix I made off of Tank. Tank is the band who came up with the song. For Cowboy Bebop, actually. I have to disagree with you. I think the CAT system's doing a lot. And by the way, this video I expect to be a lot more engagement from you guys. I want to answer all your questions that I can. I don't want to just speak to you and tell you my DD. I want to answer your questions if you have any. What kind of blunts do I use? I use a lot of different kinds, but I'm using these Show Cigarillos right now. They're $5 for $1. They're decent. I like them a lot. I couldn't sleep, man. I just could not sleep. I'm too jacked. I'm just so jacked. I can't believe what's going on around here. Craziness, craziness. No end in sight.
You're an original, aren't you?
And this is just, man, gotta love Biden in Congress right now. Give us a good time. Plus tomorrow. I'm not sure about 50 plus tomorrow. I do feel good about saying that it would be I wouldn't be surprised at all to see us hit the $52 range tomorrow. I would not be surprised in the slightest. Just because they have to cover ever so slightly to hedge against some positions. Not to close them out though, just to hedge against some other positions. Because there's so many in the money calls right now. Dixie Normus asks, think they'll miss the debt ceiling or kick the can down the road again? Dixie, I think that Congress and these guys are not going to come to an agreement in time for the government to shut down. And I do believe that the government will shut down and that the United States will probably default on their debt for the first time in history. I know I said it. I said it, and I mean it. Yeah, 1 second. Let me add a moderator over here. I've got a couple. What's up, Pulsar, Geo, Milos, Acid? It's good to see y'all. I don't even know where that video is playing.
Hey everybody, how are you guys doing?
What's up? That's AMC Bigums. My man, if you haven't seen AMC Bigums' video about oats and cat system, go check it out. AMC Bigums is definitely on to get some great information with the cat system. The cat system is doing a lot. Somebody was saying that it wasn't. I have to disagree. They're no longer able to create synthetics out of nowhere like they used to. They now have to be manually written in order for them to make naked shorts, basically. And all shares and shorts basically are now assigned basically like a barcode, if you will, a serial number that goes along with it. So this prevents naked shorting in the future, and that's what's causing the stock price to start rising now. And it's what's going to continue to cause the price to rise until the mother of all short squeeze starts. Yep. What's up, Arthur, Dixie? It's good to see you all. Get this back on the screen for you. Shipping container rates are consistently rising, guys. From U.S. to China, they're up 1,300% since 2020, since COVID. Container prices, the percentage change in the actual container prices. This is the price, the lane change price for shipping something from U.S. to China and vice versa. And this is the price of containers in general have gone up 134%. These are ocean containers. This is all your stuff that's overseas. Check this. Look at this guy. This poor kid over here, Daniel. He's a 24-year-old engineering cadet, and he can't get off of his ship for 11 months at a time. For a fucking year, he's stuck at work. A year. You know, and it's, you can see what it says here. We're some of the people who move the global economy. It's one of the things that keeps you going. Not sounding entirely convinced, you know. And these guys take a beating out there for so long. You know, he says right here on the ship, 24 hours a day, you're only thinking about work. You know, they have no needs that they can take care of. They're always constantly on these ships, and when they finally do reach a port or a dock, they usually can't get off. What's up, guys? What's up, the chain? What's up, Celadon? This is a common occurrence right here, in case you guys didn't know. You want to know why your shit's not coming from China? Because this is happening off super ships all over the world. Look at how high those are stacked. 2, 4, 6, 8, 10, 12, 14, 16, 17 or 18 containers high on these ships. Like, this is a common occurrence, you guys. There's not enough ships. There's not enough people working them. There's not enough people to load the ships at the ports. There's not enough to unload them. Not enough truckers and drayage carriers to go in and pull the containers from the ports and rail yards. crane and forklift operators to load them. This is constant. This isn't a little bit of an older article, but I wanted to pull that up for you guys because this is show you, there's 1.6 million men and women that are out there on 50,000 vessels. There's 50,000 vessels like this. Not all of them are this big. Some are smaller. Some of them are much larger. But they're out there, and they got millions of people working on them at all times. And when they get COVID, they're stuck out at sea even longer because they're not allowed to come back in. Kringle Kitten, DeHodler, everybody, Evan, thanks for coming. Kringle says risk of pseudo hyperinflation. China's getting screwed. Supply chain completely disrupted and overextended. The Treasury's cutting dollars in many federal programs. Check, 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 and check, brother. It's a checkmate on the United States economy and stock market, sadly. I wanted to show this to you guys right here. And you know what? This blunt's for you all, too. Whoever said that there, Saladon, about wanting to smoke, man. If you can't, I understand. If you got a job that doesn't allow you to smoke, then you shouldn't. And I respect that very much. Or if it's not legal, then you got to stay legal. But it's legal here in Chicago, and I love it. It's my medicine. But anyways, 52 companies in the Chicago area are reporting RAM storage paid from August 1st through 31st of $6.441 million. This is only 52 companies, okay, you guys? I received, my company and some of my partners received this email from a gentleman who is the head of drayage.com, and his name is Jason Hilsenbeck. All right, he told us that only 49 companies have responded to the poll that he sent out to us. All right, and so far out of those, we've sent him our numbers, and so did the others so far. So it's been 52 at this point. And we reported over $6 million that have been spent, basically wasted, on rail storage. Rail storage at where these ocean containers are then taken off these ships at the ports. They're put on trains, and these trains are then shipped around the country to places like Chicago, LA, New York, Seattle, Atlanta, Texas, and everything in between. And just in Chicago, out of these 52 companies that have started to report this, and he just started doing this, September 7th and 8th, as you can see. The largest company had 187 drivers, and they spent $876,000 in rail storage. The second company, 92 drivers, they spent $710,000. And this is their comment. They said just for August, it is an absurd number, and they do nothing to make the driver dwell times any better. Dwell time is detention time. These storage fees, these rail yard fees, they don't make us in and out faster. They just make more money, and we're not even sure where it's going to. What's up, Cloudy, AMC Ape, Saladon, Susan, thank you very much for coming out. Biff, JR, Acid, Eric. I would like to take questions, okay? Let's try to stay on supply chain questions, and if you guys want to ask me about the mother of all short squeezes or the stock market or anything like that after, I'd be more than happy to. This is just kind of look at this. This is another company here. They got 90 drivers, and they spent $600,000 in 1 month for rail storage, okay? Because they're responsible for this, and we're not able to ingate these containers fast enough to get them in, or to pull them from the rail yard fast enough. So that creates storage and demurrage charges, of which the trucking company, the carrier, has to handle directly. Right here, somebody else said for 85 drivers running Chicago rails, they paid $2 million last month to rails nationwide, and a quarter. This company right here with 85 drivers running the Chicago rails, they spent $2 million last month to rails nationwide. And a quarter, $550,000, is just for the Chicago market. That's one company, one drayage company. What's up, James, Nancy, Chris, Kringle, Acid, is everybody, Katsu, it's good to see you. Look at these guys. This company spent $378,000 on rail storage for August. Look at what this guy says. Rail shortens our last free time. They have no chassis for us to get loads out. I'll stop right there because that's very important. There's so many chassis and containers sitting out there. Like all of these are sitting out either on chassis or on ships or on trains. And there's no more chassis left over. The chassis is what they put the container on for the truck to come and hook up to it, the trailer basically. And they hook up to the trailer with the container on top that's got, like container locks that locks into it. And then they take it to where it's got to go. From then it's unloaded and then they've got to return the chassis and the container back to a certain point. Usually, I'm not going to say usually where they returned it from because things are so complicated. They usually return to a third place. And so there's extra charges for that as well. Hey guys, we're on a fucking moon.
Holiday season?
Can you guys hear that?
Well, certainly, I would think so. I think that there are two different markets. One is the sea freight market. I would reckon that for a good part of next year, not just this year, a good part of next year.
This is what creates hyperinflation. This is what creates hyperinflation. High shipping costs, increased demand, container shortages, port congestions, factory shutdowns, worker shortages.
The current situation will not improve. Then when it comes to the second half of next year, it depends very much how.
I know you can hear him, Chris. That's the point.
Coming back to the market.
This is the guy who is the head of DHL. And when you take things like a component shortage, like we're seeing for chips and precious metals and new vehicles, rising material costs, lumber, and so on, I won't even go on the lists, high shipping costs, and then the artificial printing of money, ridiculous demurrage fees, like all these, look at this, become ridiculous. Like these people are waiting for so long, and everybody has their own comments about how bad it is. This is from drayage.com. Again, I told you guys, Jason Hillenbeck from, loadmatchdrayage.com emailed us about this project. He says, I'm very serious about doing this project. The Illinois Trucking Association and Intermodal Association of Chicago is as well. We keep complaining about terminals. So please take some time and add up how much you spent in the Chicago rail storage fees. Your company info and dollars will be kept private, etc. And so these trying to get this put out to large companies and large media like Freight Waves. They're huge media. They have magazines and truck stops, and they also do, online presence. So it kind of gives you an indication of just out of 52 companies that work the drayage market in Chicago, they're spending hundreds of thousands, millions of dollars in fees because of how bad the rail and port times are all around the country. And this is the same thing at the airlines. It's the same thing at the ports, the OSHA ports. Look, this does not include all the storage the customers paid because we truly could not afford to pay it all on behalf of our customers. The rails have cut staffing to the bone and do not force their contractors to hire more people to accommodate the massive increase in freight. The dwell times have increased so badly, that's detention time, waiting, that a city driver is lucky to complete one load a day. We run out of hours just waiting for a lift on, putting the container on the fucking truck, trailer, chassis, and have to pull the drivers out to stay within hours of service. Hours of service is new electronic log device regulations through the hours of service have made trucking terrible. What a complete waste of time to sit at a rail for 3 to 4 hours and leave empty-handed. The rails want to blame the carriers and the customers, and it is a total joke. I don't care if they run 24/7 if they feel everyone else should as well, which is everyone knows is unrealistic. I can't imagine calling my customer and telling them to staff 24/7 because BNSF said so. This is one company that has 5 drivers that spent $55,000 in storage last month, or this month of August. Okay, this last month, August, excuse me. You know what I meant. Can you say that hyperinflation is going to hit us harder than you've ever fucking seen in America? The Great Depression 2.0 is about to be here. Evergrande's fire sale has just started. Their bonds in China are complete junk at this point. The Euro bonds are negative and under hyperinflation return levels. Evergrande's just been cut to a CCC minus, which is pretty much impending fucking doom for their credit. And their dollar bonds are fucking worthless. Kringle Kitten says, protect buying power with hedges. This thing is real. All the factors are lining up for alarming inflation. Yeah, check it out. I didn't even mean to do that. I just happened to look. It would see that he was saying something. And here's the inflation numbers. This was 2008, 4.2, 5.0, 5.6, 5.4, 4.9. Right? What are we at now? 4.2, 5.0, 5.4, 5.4. And if you ask me, this is going to be in the sixes, but the government's changed the reporting rules, the way that they calculate these numbers to exclude cars, because we all know that inflation on used cars is up 47% this year. So they're going to exclude that in the PCI to be able to keep this number under 6%. But we all know it's higher than that because you can see the prices at your grocery store, on the car lots, in the gas tank, in the fuel stops that you make, everywhere that you go. Your utility bills, your rent, your taxes, and mortgages. They keep downplaying it, well, for obvious reasons. They want people to stay in the market. And somebody asks, any AMC GME updates other than HODL? Yeah, we did have some great earnings today. The earnings news was super bullish. It was super fantastic news that we received for their earnings, and I'm very optimistic that they're going to do even better. For example, they now have $1.1 billion on hand, GameStop. That's a lot of fucking money. And they have absolutely zero debt and a very small loan to the French government, a very small, low-interest term loan. What's up, Tony, Aaron, Ray, and Moises, everybody? Thanks for showing out. So yeah, the TLDR might be, HODL for you guys, but it's not the answer for everybody. Everybody's answer is going to be different because of, their own financial situation. People need to decide what's right for them. Like what's right for my mom and my mother's 401k and how I helped her handle that is not the same way that I'm handling my money. And that's because we're different ages with different financial situations. And I have to make sure that she's taken care of and that I am as well. And I can afford to take a lot more risk than she can. What's up, Eddie, JR? Thank you very much. Let me know if you guys got any questions here. But this is, again, a slightly older article from The Hill, but we'll back off of that. This is where I wanted your attention, really, because this right here from Forbes is really one of the most important things, okay? This is not looking to go away anytime soon. And there was a huge collapse and then an extremely big surge in customer demand when COVID occurred and nobody was working. And so that just kind of kicked everything off. And it's just been going on since 2020. I deal with this every single day of my life. And so I understand what shipping truly entails, and it's extremely hard. Kringle Kitten currently says China's been lending their money to undisciplined borrowers by the masses, building cities the size of Manhattan with no inhabitants. There's food shortages on top of bonds getting smoked over there. Yeah, you make a great point, man. Wow. Who said GameStop quarter-on-quarter profits are down because their profits are up? Well, I don't know what the hell you're smoking over there. I'm going to put the stop to that chat right now because I'm smoking some good-ass weed, and even I know that GameStop's shit was bullish. All right, check this out. GameStop is adding a 530,000 square foot facility, state-of-the-art, in Reno, Nevada. They're going to be doing distribution nationwide from coast to coast. It's going to be fantastic. Their net sales are up 25.63%. Net sales are up 25.63% this quarter. All right. They have raised $1.1 billion in net proceeds from their June 2021 issuing. They have a net loss of 0.85 cents per diluted share this year, but it was 1.71 last year. It has increased massively by around 55%. They have a 55% gain in net revenue, which reduced their net losses. This is huge fundamental stability for GameStop, and the showing the return of many people going back to spend their money at GameStop. This is super bullish. Super fucking bullish. Today, what else? What isn't bullish? Banks. Banks are pretty fucking bearish right now. U.S. bank profits fell 8.3% to $70.4 billion in the second quarter. And their liabilities increased a lot fucking more than that. I proved that in previous videos. In the trillions. Feel free. Container prices are soaring. You know, I've shown you guys. This is what it costs. This is the increased multiple. It was increased 1,300 times to ship from China to the U.S. West Coast. And this is from the U.S. West Coast to China. Excuse me. Get that out of there. This has stayed pretty steady. But it did have a nice dip. Increase in dip. This is the price index for all containers from the Asia North America region. Right? Look at that percent change in June. It has gone up almost from March, almost directly from February, March. Seems like it could be correlated even to our little situation in January with GameStop. If you want to put your tinfoil hat on. That's cool. Meet Kevin went super bear on GME, said somebody. Yeah, that's nice. He's running for governor's office. He's not tuned in with GameStop and AMC the way that we are. I understand. He's got his own gubernatorial race in California to worry about. He's not concerned with AMC and GameStop, I assure you. At the Port of LA, 17% of national cargoes received. Import volumes increased by 27% in June versus June of last year. And load exports decreased 12%. So what does that mean? Imports are up. And exports for America are down because our GDP is down and it's almost entirely created by stimulus spending by the federal government and by the people spending money on fucking used cars and takeout. Meanwhile, the number of empty containers jumped 47% compared to last year due to the heavy demand in Asia. Damn. I didn't say Meet Kevin was winning. I said he was running for gubernatorial, for governor. Hello, Eric, Pam, Pete, Rodney, Eddie, thank you. Tino, Javier, if you guys have any questions, feel free to throw them my way. But this right here, it's clear cut. This article came out yesterday from Forbes, I believe. I already have been talking about this with you guys for weeks now, but it seems like, the mainstream media has really shifted over the last few days as to what the narrative is with banks and with supply chain. And it seems like they're coming around and they're starting to realize that they better start pushing this right away. See, it's far out. More ships are needed, but additional supply is years out. Okay? New ships won't come online until 2023. It's quite simple. And ports are more productive, but it's not enough. Okay, it's not just a U.S. phenomenon. Okay, they are having. You guys know what's going on with Hurricane Ida. You guys have probably half of you are affected by it. I'm sorry. Traffic on the Yangtze River in China is challenged due to extreme weather. Authorities closed the river because of storms. There's weather and flooding over there. From August to December, there's 16 to 18 typhoons forecasted to form in the Northwest Pacific and South China Sea. 16 to 18 hurricanes, guys. 16, that's insane. And then it says here, as for the weather in the U.S. ports, the ports of New Orleans, Baton Rouge, Gramercy, and Morgan City in Louisiana, and the port of Pascagoula in Mississippi are closed following the recent arrival of Ida because it destroyed our U.S. ports, and it also destroyed our oil production. All of our oil production in the Gulf is completely cut right now. Clearly, truck driver shortage is not going away. I've been struggling every day. My team has, and everybody else in the industry. And we succeed, but we usually succeed, but sometimes we fail to find a driver in a certain area or within a certain time frame. Often because customers' time frames are unrealistic, but usually because, when we make them realistic, usually because of the current issues, we're usually able to find somebody to help us. But it's not always a possibility, and it's becoming more and more common at this time. On that note, I need another pour real quick. I'll scroll down if you guys are reading this. As the average price of cars is up, and the average price of trucks is up even more. Okay? Way more. Come on, you keep it coming. All right, there we go. Walmart's got the third largest fleet in the country, and they're trying to hire drivers so badly that they're offering $12,000 signing bonuses, and they still can't fucking hire drivers. The argument of drivers are not getting paid enough is not fucking true. Okay, I own a trucking company, and separate from that, I own a logistics and distribution company, a third-party logistics company. The reason I tell you this is because I know what it's like to have drivers. I know what it's like to work for other carriers, brokers, freight forwarders, and companies from around the world, manufacturers, importing and exporting things via the ocean, air freight, and everything in between. It is extremely difficult to find drivers that are able to meet the requirements of all of the freight that's out there, regardless of pay. Walmart plans to offer them an average salary of $87,500. The drivers don't, these guys don't have, they don't have to pay for their own truck. They don't have to pay for their own truck insurance. Walmart will pay that for them, you know, and give them $12,000 signing bonuses. And that's double the median salary for the industry. And that's an example of what they're currently doing to try to give people into the industry. And they're still not able to bring enough bodies that are able to drive. The turnover is huge. And look, we were just getting done talking about railroads are literally stuck in the middle. Because before you get things onto trucks, usually you bring them in off an airplane or off an ocean container, unless it was made domestically. Then, of course, it's coming off another truck. Well, SOS just got here. How does this involve GME and AMC? A lot of people don't seem to understand that, and this is not directly at you, my friend, but a lot of people don't seem to understand that GameStop and AMC are extremely heavily shorted, and not just heavily shorted in a way that's reported to Ortex data and Fintel, in a way that's illegal and nefarious and naked and synthetic, that has been done too many times over, to the point where these banks are over leveraged to the tune of $190 trillion, and they only have assets to the tune of around $60 trillion. So they can never repay the amount of money which they currently owe. The amount that they currently owe, $190 trillion, is 5 times the world's global domestic product. Gross domestic product. Okay, 5 times the world's GDP. That's what these guys fucking owe, and they can't pay it. So I'm not saying every one of those dollars has to be repaid, but only the majority of them will. The majority of them will. Not every last dollar from those derivatives, because they're not all going to have negative losses. Some of them will have a positive gain, and that's okay. But the vast majority of them will be complete losses. And when this kind of thing happens, and when we have issues like this creating hyperinflation, it leads to further issues in the government, where they begin to discuss debt ceilings, infrastructure bills, $3.5 trillion plans, you know, for education, healthcare, and climate. These guys have to talk about this reconciliation bill when they come back to work on September 20th. And on October 1st, the U.S. government could shut down as of 12 a.m. Eastern Time. I don't know if you guys are familiar with this, but you know, Biden is trying to do things to boost the economy, like increasing Pell Grants and things like that. But at the same time, student loans now need to be repaid, and eviction moratorium is over. So 6.1 million people face eviction, and 2 million people plus face bankruptcy. And then the domino effect from that we'll continue to see. That's as of last week. Excuse me. So then you start seeing situations like this, and these banks are getting margin called, and they're losing profitability, and they're only making $70 billion a quarter, but they're losing, almost $1 trillion in that same quarter. That is the real problem. That is where the hyperinflation meets the bank sector, meets the stock market. And when you have issues like this in Congress, where Democrats cannot agree, and 100 Republicans have already said they're going to disagree, and half the Democrats are currently disagreeing with the bill, the infrastructure bill, and the reconciliation bill as it sits, while they're all on vacation, mind you. They take a 7-week vacation while Americans are struggling. What do you think is going to happen to the stock market? Because it's happened in the past, in 2013. The government doesn't have to default on the debt for the United States credit to be shot to shit. In the past, in 2013, our credit was downgraded during the Obama administration and lawmakers scandal, as well as in 2011, the S&P downgraded by the federal government was below AAA, which is an A-. The downgrade to AA+. I'm sorry, it was a A+. Sorry, excuse me. We got to A- in 2013. And every time that this happens, the stock market takes a massive hit. And back then, the debt ceiling, they were arguing about a debt ceiling of $14.3 trillion in 2011, and we're currently in the $28 trillion mark. Okay, the United States received its first ever downgrade to U.S. sovereign debt, lowering the rating to AA+ and remain a negative outlook, maintain a negative outlook. And what it reflects is a downgrade in the effectiveness, stability, and predictability of American policymaking and political institutions and their weakness at that time. So it's very bad for our stock market every single time that this happens. So you end up seeing a huge liquidity drain from the market, and margin calls will start being issued. I can't say I know that when this is going to happen or if this will occur like this, but this is the absolute same thing that we saw in 2013. And who was in charge back then? The same Republicans that are currently in charge. In 2013, Fitch warned that they would cut the United States rating, and they finally did. On October 17th, Dagon Global downgraded us to an A-. That was the worst we had seen it at that time. And it did really, really destroy our stock market very quickly as well. Back then we had Paul Ryan, and they were pushing another bill. And that's all they do is they argue over these bills. They end up coming close to defaulting on their debt, or completely, or in this case, I think they might even actually default on their debt for the first time. So you're going to see a lot of the same exact shit here that you saw back then, and there's huge disapproval ratings in the way that people handle this. So people think that currently that this isn't going to happen because it would be, terrible. Yeah, I know. That's what everybody thought back then as well. And it happened at that time. Look at what they were talking about at the Treasury back in 2013. October of 2013, the United States Treasury was talking about the macroeconomic effect of the debt ceiling brinkmanship. Yeah, just don't fucking dance. So they saw this happen The financial market stress that developed in August of 2011 during that debt ceiling crisis persisted into 2012, even though Congress raised the debt ceiling prior to the exhaustion of extraordinary measures. And this is what I've been getting at the whole time. They don't have to actually fucking default on the debt, or they don't have to run out of the extraordinary measures in order to actually destroy the fucking stock market, the real estate market, and everybody else's pensions and 401ks that are stuck in these blue chips that are going to get fucking dropped to the ground when these market makers and hedge funds like Citadel, who is the biggest market maker in the world, have to liquidate those assets in order to pay things back. Because NSCC 010, the most recent filing, was pushed back to November. Thank God. You guys think this is a bad thing? It's not a bad thing that 010 was pushed to November. It's the best thing in the world. Because in that case, the United States government and the NSCC would have been left over holding a bag of garbage assets that were completely worthless, letting these hedge funds or market makers and banks off the hook. And so instead of them using this pawn shop effect and not being able to maintain it because of the huge volume of losses that are occurring here to the tune of $190 trillion in unrealized derivative losses, according to the Office of the Comptroller of the Currency, we're going to see the mother of all short squeezes. Plain and fucking simple. Plain and fucking simple. Any questions? Any questions? The S&P 500 index of equity prices fell about 17% in the period surrounding the 2011 debt limit debate. 17% over the first half of the year until 2012. Half of U.S. households own stocks either directly or indirectly through mutual funds or 401ks. So this fall in equity price reduced household wealth across a wide swath of the economy. They're telling us the United States Department of the Treasury report in 2013 told us about everything that happened in 2011. And now we're seeing the exact same fucking thing. Janet Yellen knows everything about this. And that's why she's desperately releasing letters about this to make this fucking work out. To beg Congress, or to at least say that she warned them, you know. That's really what I'm thinking. I really think that she's just trying to make it seem like she warned them. The chance of default, Raymundo, in my opinion, is very fucking high. We have never been this close to a government default. And I'll show you fucking why. Dixie Normus, how do we know they won't limit / stop trading when the MOASS happens? Dixie Norman, if they stop trading or limit it when the MOASS happens, an entire generation of investors will be completely rich after it, and they will take all their money out of the stock market, and the United States government will never see that money again. So they're too fucking smart to do something like that because they know that they would lose trillions and trillions of dollars to a mass exodus out of the stock market, and the United States would not recover for many, many years. This is the Bureau of the Fiscal Service, fiscal.treasury.gov. You can see the receipts and outlays through 2021, and they began the year with a lot of fucking money. Their total receipts for July were around $262 billion, and their outlays was around $564 billion. Right? And there's a reason that I'm telling you these numbers, because this is how you can figure out how much they spend on average. And we already found out, I've already shown you that they already cut Medicare and Social Security spending, as well as VA benefits. So they spend $564 billion, and they make an income of about $262 billion in receipts. You know, that's a $302 billion deficit. Okay, we currently have a $302 billion deficit. Pretty bad. This is the daily Treasury statement. We're going to look at September 7th because it's the most recent available. Today is currently September 8th. It is 11:57 p.m. It's about to be September 9th for me, Central Time. Wow. Holy fuck. The closing balance today, Tuesday, September 7th, is $231 billion. September 8th, September, that was yesterday. I'm sorry. I was a little confused. As of you probably watching this, it's September 9th or 10th. But as of September 7th, they have a closing balance of $231 billion. We just showed that the United States has a deficit from the month of July, on average, $302 billion. Because in July of 2021, they had an income of $262 billion and expenditures, outlays of $564 billion. That means that they spent $302 billion more than they actually had. I'm sorry, no. Yeah, okay, we're all good. That statement was correct. Cumulative receipts, outlays, and surplus through 2021. This is the first shit that they cut. Social Security, Medicare, and veterans benefits. I'm so sorry. This is why you haven't received your tax returns also. Sorry, everybody. So as you can see, their outlays were 564, but the receipts were only 262. So that's 302, a deficit of 302 billion. And they currently only have 231 billion. We saw earlier in September, about August 31st or somewhere around that, we saw that the United States government sold about $100 billion in mortgage-backed securities and junk bonds. And they took money from, watch this, where'd they take that money from? The economic recovery programs. $74 billion they took out. Individual tax refunds are at all-time lows. This was for the year. This was for the month. This is for the day. 202 million. Businesses. Child tax credits. But Social Security benefits payments. This is how much so far they spent this year. And this month they've cut it to 21 billion. And as of September 7th, they only spent 56 million. So they've severely slashed their benefits payments. Where's Medicare? It's up here. Medicare prescription drugs. They've spent 97,000 millions. So that's 97 billion this year so far. But this month they only spent around 8 billion. And as of September 7th, they spent $0 on it. Marketplace payments to hospitals and doctors. We've seen that this has been $0 for the last week, for the entire month of September. September 9th now, as of today. And as of this report, September 7th, all of these numbers for the whole week have been zero. They have not paid doctors, hospitals, and so on. Anybody that accepts Medicare of any sort. So she's trying, Janet Yellen's trying really hard to try to make this fucking shit work. But it's just not possible. So if your charts, there's some pretty charts. And if you like numbers, there's some fucking numbers that don't lie. Look at their outlays in June. And here's one thing that people don't understand. We just got hit by a major hurricane that destroyed everything from New Orleans all the way up to New York. And there's flooding and people without power, without homes, without gas or electricity, in sweltering heat, and soon to be freezing cold up in the Northeast. So FEMA's going to need a lot of fucking money, guys. Do you understand this? FEMA's going to need a lot more than's been allocated. And FEMA's been complaining that they need more money. What's the first thing that comes up?
Like almost 5 days.
That's September 3rd.
My kids are...
Let's see what AOC is saying over here. Yeah, supposedly disaster relief is here. Yeah, sure. They've approved FEMA individual assistance. So that means that they've got to get the money from somewhere. And that money's going to come out of the FEMA fund. And once it does, then it's going to start coming out of this fund. And where's this FEMA here? Emergency rental assistance. Oh yeah, remember that eviction moratorium money? They paid out $0 on September 7th. FEMA. They have no fucking money. They've only given them $3 billion this year. This month they gave them $41 million. And as of September 7th, on September 7th, they gave them $12 million. So you think that they're not going to have to start increasing that number if they want these people to start receiving the help that they actually need? So again, we've seen the reports from 2013 where the U.S. Treasury tells us everything that happened back in 2011, how bad our stock market got hit. Roughly half of U.S. households own stocks, through mutual funds or 401ks. So they fall in equity prices, reduce household wealth across a wide swath of the economy. Between the second and third quarter of 2011, household wealth fell $2.4 trillion. Well, guess what, guys? What else happened according to the Bureau of Economic Analysis? Quarter 1 report for 2021. Personal savings for Americans, and there's a quarter 2 report. Personal savings for Americans was 1.97 in the second quarter, and in the first quarter was 4.07 trillion. So that means that Americans lost $2 trillion in savings alone. And what did the fucking Treasury tell us? That between the second and third quarter of 2011, when the 2011 debt ceiling crisis and stock market crash occurred, household wealth fell $2.4 trillion. And this tends, all else equal, to lead to a decline in consumption spending. Consumer spending accounts for roughly 70% of the gross domestic product. And we've already proven that the United States GDP almost entirely consists of stimulus. As of a report released by the U.S. Department of Commerce, the Bureau of Economic Analysis, for the Q1 2021, they stated directly from the report, quote unquote, the GDP is primarily based in the continued economic recovery from the COVID-19 pandemic as government assistance payments were distributed to households and businesses. And then also they say an acceleration in consumer spending and upturns in federal as well as state and local government spending were accounted for the acceleration of real GDP. All the money that the United States has and is showing on the gross domestic product is money that is being spent directly from the government and being printed. There is no real economic growth. Also, now that statement was mine. That was not a quote from them, but that's how I feel. And I think it's pretty obvious. Because what do I also say? The acceleration in consumer spending reflected an upturn in spending on goods and acceleration in spending on services. What were those goods? Motor vehicles and parts, as well as food and beverages purchased for off-purchase premises consumption. Those purchases are all takeout. That's what the second contributing factor to our GDP. An upturn in federal government spending was the second largest contributor to the acceleration in real GDP. And what did the federal government spend the money on? Paycheck Protection Program loans and applications on behalf of banks and federal government added approximately $13.2 billion, which is $53 billion at an annual rate, to non-defense services. Non-defense means COVID spending. Non-defense means COVID spending. Federal government purchases COVID-19 vaccines for distribution to the public, contributed to the upturn in non-defense goods. Okay, under fucking stand. You get what the hell's going on? Can I spell it out more clearly? What else did they say? Downturn in exports reflected downturn in goods and services. Residential fixed investments slowed. Downturns in brokers' commissions across the board. Non-residential investments slowed. Equipment investments slowed. Transportation equipment investment slowed. Imports slowed. Everything. The main contributor was a downturn in automotive vehicles, engines, and parts because Americans are no longer receiving fucking stimulus money to buy used cars and used car parts with that are inflated to a rate of 47% for the quarter. So that's what's happening. Sadly, we don't have enough money. And they're going to fucking run out of this $231 billion, even if you take into account the money that they're receiving through tax revenues and selling junk bonds and cutting fucking spending, because FEMA's going to need money. And so are a lot of other people and a lot of other, institutions here. And if we default on our debt, it's an automatic mother of all short squeezes, in my opinion, because the banks will lose so much money that they will automatically be margin called, and margin calling the hedge funds, and they owe them money to maintain their own neck above the water. So that's it. Real GDP, yeah, it's not very real, is it? Inflation is transitory. The eviction moratorium is a good thing. What's going to happen with these people that when they have no homes and they can't rent? They have a eviction moratorium that's shown on their credit for 7 years that they didn't pay their landlord. How are they going to rent an apartment? They're going to require maybe some sort of special insurance that Vanguard's going to issue. You're going to have to buy, pay for this SR22, drunk driver / irresponsible renter insurance through Vanguard to rent an apartment that BlackRock owns that is being property managed by one of the largest property management companies that's probably going to be owned by Bill fucking Gates. Who knows? Tinfoil hat. BlackRock bought several 100,000 homes over the last few months. Vanguard and BlackRock are both very heavily invested in GameStop and AMC. Very, very heavily invested in GameStop and AMC. In counter to the people who are shorting AMC, which is Citadel and BTG Pactual and other assholes who are criminals like that. And real quick, since we're on the subject, I wasn't going to hit this, but let me just go over that and see if I can pull up this graphic for you. Because this is a fun one. BTG Pactual Asset Management. These guys are complete crooks. This is a Bloomberg terminal for GameStop. Shows that they have 22,000 shares in ETFs through multiple portfolios, as well as Capitalo Investimentos. They have, I'm sorry, I said shares. I meant put contracts. So that's representative of 100 times that in shares. 397,900 put contracts for Capitalo Investimentos throughout various portfolios in ETFs around the world. Luxembourg, London, Brazil, Cayman Islands. So that's 100 times. You got to multiply that by 100 to figure out how many shares that they actually have to buy back to close out their short positions as well. Because that's puts. You can see it's filtered out. So it's only showing puts on 13F filings. But this doesn't say 13F here or P, because even though that is what's filtered, it's not showing up here because there's so many portfolios in there. That's what it's showing, what's inside the portfolios. That's why there's not a specific name for the name here, and it's just showing the name of the holder, which is Constancia, Capitalo, and BTG. Let me see if I can get another one for you guys. Sorry, 1 second. Oh, yeah. Don't forget, this is what they look like. This is what it looked like back the last time the stock market crashed. This is what the hedge funds were laughing at Americans protesting because they lost their life savings. Oh, I'd love to find that for you. These are the guys in charge of the Commodity Futures Trading Commission. Rostam Beanham. He replaced Heath Tarbert, and this asshole now went to go work for Citadel. What's going on with BTG Pactual? Back in 2015, Brazilian senators, as well as attorneys, and two CEOs for BTG Pactual were arrested and charged with a variety of violations, and they were sent to prison. And Andres Esteves, a banker and billionaire CEO, he is the sixth richest person in the world, according to Forbes. He is the CEO and controlling shareholder of BTG Pactual, and he was arrested and charged on many crimes. And then while he was in prison, he spent 3 weeks in prison, and while that occurred, he sold off 24% of his investment in 24% of his ownership of BTG Pactual, and he was released from prison 3 weeks later with no excuse, no reason why. So yeah, that's BTG Pactual and GameStop. And these are the kind of people that are working with Citadel. This was a bribery scandal. Who do you think they're bribing? I don't know. I got my tinfoil hat on. He was put in place by Joe Biden, and he's the one that allowed the Brazilian depository receipts for A2MC34 to be issued. And knowing what we know about these stocks and that they're so overly shorted, to allow them to be issued, regardless of the reason, should be criminal, because we all know that there's so many synthetics out there. And we also know that these shares in Brazil are completely unsponsored, level 1 BDRs. They're without the support of AMC. And that's an example of a Brazilian depository receipt. They work very similar to American depository receipts. And, Citibank holds a lot of them. I don't know how many of them are synthetic, but I know the shares, the float is sold many times over. Issued by Banco de Brazil, through BlackRock, issued by BlackRock, the depository institution is B3, and the custodian institution, with the one who has to be the holder, is Citibank. The custodian bank is responsible for custody of the equities underlying the Brazilian depository receipts, and that would be a 6-to-1 ratio for AMC of 6 certificates for every 1 share that needs to be held by Citibank. As you can see here, that's the Brazilian A2MC BDR 002 on the Brazilian market. That was an unsponsored BDR issued through Banco B3, Banco de Brasil. I got a lot of proof on these guys, and I don't need any more, other than, sadly, our fucking economy is going to crash in the process. And a lot of people have no idea what's happening. So I apologize for my little rant there. But unless anybody has any questions, I think I've said about enough. Be Sensible says apes will rise up if need be. I don't know, man. I would. I'm not going to take it lying down. Eddie, and I'm not giving anybody advice or any opinions. That's just how I feel. Boo says, please speak more tinfoil. That is my shit. I understand, man, but like the facts don't lie. And that's that I just showed you guys exactly how our government has spending in July of 2021 spent $302 billion more than they have. And as of September 9th, they've only got a balance of $231 billion in the bank, in the Federal Reserve account. That's their total operating balance. That was as of September 7th. That was their closing balance as of September 7th. So they've got less now. And they got to talk about this debt ceiling issue and the infrastructure bill and the $3.5 trillion spending package all on September 20th. And then the government, they've only got 9 days before for an actual shutdown of the government. And the stock market's going to collapse way before those 9 days are up. I guarantee you fucking that. Knock on wood, not financial advice. That's just what I feel. Any takers on when the crash will happen, says C-Mac. I have no idea. Leo says, could MOASS lead to 6 figures at the peak? I don't know exactly what it could lead to, but it is very possible. And theoretically speaking, it is entirely possible, because the number of shares that have been sold is, in my opinion, hundreds and hundreds of times, well, more than actually were issued. Let me show you something right here real quick. From a data scientist. Okay, I still believe that 10 times or more of AMC and GameStop, the float, have actually been sold. 10 times. User of Intellect is a data analyst She's a very smart person who I have been watching her due diligence for a long time. And she did a super mega data analysis on this stuff and shows that the true value of the current shares, including synthetics, within this range is 1.5 to 5.5 with 99% confidence, according to her data and method. She extrapolated the number of AMC synthetic shares using advanced software based on the say shareholder vote and 3 indicators: sample size, variability, and confidence levels. She made, I'm not going to go through every little thing, but she used 3 different methods of extrapolation: linear, S-curve, and mixed mode. And all 3 of them were almost the exact result. And in a perfect world of statistics, assuming all people who logged those shares voted for a certain question, she made some other changes to make sure that certain people who voted, because those actually counted. And if 10% of those people didn't vote, she reduced that amount, also reduced it for in case 20% of them didn't vote for that. So they diluted the number of participants to control for small accounts by 100 and 200%. And even though diluting 100 to 200%, they still came out with 63,000 investors holding 126,000 retail logged 68 million shares. So 126,000 apiece. So with 100% dilution, the total shares out there, including synthetics, would be 2.2 billion. And with 200%, the total shares out there, synthetics would be 1.5 billion. So she's reducing it by 100%, reducing it by 200%, and coming up with lower and lower numbers to account for anybody who might say that these numbers are not taking into account certain variables. So in the end, she has a 95% confidence interval, which is more common for these types of analysis. Instead of 99, the true average would lie between 1.8 billion to 4.2 billion. And her statistical guide tells her the synthetics are 3 to 4 times. And this is all from her statistical analysis as a data analyst. And I cannot speak to its accuracy other than it's something that I believe that she probably did in the best interest as an ape, because she's been doing due diligence for a long time for us as Ape Nation. So that's an example of just one person who's analyzed a small portion of the data that they've been able to get their hands on, and she's done, and that's just based off the reported data on Ortex and whatnot. So who knows what the reals are, because we know that a lot of long positions have actually been marked as short. We know that a lot of short positions are being marked as long, and that is cooking the books, because a short position is such as a put is a sale of an asset, and a long position is the purchase of a share, for example. And through the stroke of a keyboard, they're able to mark that short in their reports to Ortex and the federal government and the IRS and the American people as a long position. So they're cooking the books on their end in profits and revenue that is not actually there. And it is also showing up on the banks, who are also showing that same profit and revenue without knowing it. Even still, we know that their revenue to losses is 10 times over in the losses section, to the tune of $190 trillion. So yeah, fun times, huh, guys? Fun times. So yeah, that's about all I've got for you tonight. Take a look at, we did a takeover of the Bull House yesterday with Jackson Hunter, Kenna Hamblin, and myself. We discussed Evergrande Bank and their bankruptcy, as well as many other things. Also check out that AMC has put out a new, here, I'll show it to you guys.
We come to AMC theaters to laugh, to cry,
New ad for AMC.
to care. Because we need that, all of us. That indescribable feeling we get when the lights begin to dim. And we go somewhere we've never been before. Not just entertained, but somehow reborn. Together. Dazzling images on a huge silver screen. Sound that I can feel, Somehow, heartbreak feels good in a place like this. Our heroes feel like the best part of us, and stories feel perfect and powerful. Because here, they are. AMC Theaters. We make movies better.
Yeah, so definitely stay on the lookout for that. There's going to be they're basically teaming up. AMC and GameStop are going to be teaming up in order to, do a media campaign and probably other things in the future that we're still not entirely sure what it's going to entail. But they did tease it today, and I am pretty pumped for it. Adam Aron is a great CEO, as is Ryan Cohen, and a lot of people were giving Cohen some issues for the earnings call, but I think he said exactly what he needed to say. He stayed within the law. He told people the numbers. He didn't give them any excuse to say that he manipulated the market in any way when the mother of all short squeezes occurs. Don't you guys understand that Ryan Cohen has to be very careful not to say the wrong thing? Okay, he has to be extremely careful not to say the wrong thing in order to not get in trouble. So does Adam Aron. Their attorneys have to look at what they're actually going to say, and they have to read it out verbatim in order to prevent any issues in the future. So the mother of all short squeeze is secure. He said great things. GameStop net sales up 25%. They're adding a new warehouse in Reno, Nevada for nationwide distribution. They already have one in Pennsylvania that's 700,000 square feet. That's running strong. They increased their net proceeds by $1.1 billion that they raised in June of 2021. Their net losses have decreased. Last year it was 1.71 cents, $1.71 per diluted share. This year it's only 0.85 cents per diluted share. It's a much better earnings. It's still a loss, but it's much better than it was last year. About 55% better, and that's huge. So if their net sales are increasing by 25% and they're just barely getting into their stride, I think everything's looking very good for GameStop and AMC. So I'm extremely happy. I couldn't be more pumped for the short squeeze and for these companies. I'm truly happy for them and for all of you investors out there that make a lot of money on the stock market. So cheers. Gary Gensler, I want my money. I'm going to get my whistleblower money from you. Last thing, why do people struggle to see AMC or GameStop at $10,000 a share, $50,000 a share, or $500,000 a share? Because most people have never had that kind of money. It is life-changing wealth. And they're so jaded from the struggles and trials and tribulations of every single day of their lives that the thought of getting their hopes broken and your hopes broken by imagining a share price this high is just too painful. And that is the poor man's mindset. And we needed to discard that immediately, because that is not the way that you need to think. Because there have been other people out there and there are people out there making themselves millionaires and billionaires every single fucking day. For example, there was this article posted earlier this year on the Ringer about this guy named Mike McCaskill, and he's invested in GameStop. He's invested right now. And on January 26th, when GameStop ran, he made himself $25 million. And he sold off his positions. And in the process, he also used his kids' college funds and made each of them $1.5 trillion for their college tuition funds. And then he bought back in because later in the article, it says that he bought back in because he still believes in it, but he did secure a vast amount of money already. So he knows that this shit's not over, and he's still invested into it, but he also secured profits. Smart man, right? What did he say? If anything, the money afforded him the privilege to continue being exactly the same person that he's always been. You know, it's more the satisfaction of saying, I did that for him and knowing that he's financially set for life. But he's still out there working on the beach, running volleyball tournaments and teaching people how to surf and shit like that. Because that's what he loves to do. And that's what this money affords you the opportunity to do if you can manage to work things out in your favor. So let that sink in. Don't forget about that. Millionaires and billionaires are being made every fucking day. Every fucking day. MK says the whole system is rigged. How can we expect MOASS? They can't stop it, brother. They can't stop it. They're trying to bring it down gently, I think, through this debt ceiling issue. And it's not going to come down gently. They're just going to be able to time it enough for them to make a lot of money off of it. And that's good enough for them because insider trading is legal for Congress. Love it. Why not us? Exactly, Pete. Why not? When this is over, people are going to be calling you lucky. People are going to say, oh, you're so lucky. I can't believe you were in on that play. Oh, how did you know? I can't believe it. No, fuck that. You're lucky. You're driving that car because you invested in AMC and GameStop. You know how many people are already saying that shit? And you're not lucky. You're a smart investor. You're doing what you think is right to make money based off the information provided. And you like the stock because I like the stock. That's what I am. Why I'm doing it. I'm in it for the play, and I like the fucking stocks. I like video games and fucking movies. So yeah, have a great day. Love you guys. Enjoy the rest of your day. I think that's about it for me tonight. Let's go enjoy our nights. Saladon says AMC's not going to 10K, maybe 2 to 3K. I'd say bet. But I've already got all my money invested in AMC and GameStop that's not invested in my businesses. So I'm sorry, man. I can't bet you. I've already got it all bet on the line. So I'm taking you up on that. Take you up on that, no problem. That's how I feel. It's a great time to be an ape, says Pam. Hell yeah. Pam, thank you for your support. I've been seeing you on AMC and GameStop, YouTube and Threads all around, for many, many months. So thank you for being an OG, everybody. Gen Z, Baba, Papa, CBJ, Mando, Nancy, Sue, thank you, Jeff, Jonathan, CBJ, everybody out there. Kringle, thanks everybody for all your help. Kringle Kitten. Maybe we'll get lucky and hear from Deep fucking Valley or Michael Burry one of these days. Favorite movie? Maybe Boondock Saints. Do me a favor, drop a like if you can, drop a comment, just for the algorithm. My ego doesn't care, just to share with other people. Tyrese, I think we're gonna moon in fucking September and October, brother.
You're an original, aren't you?
Cowboy.
I think it's time to blow this thing. Get everybody this stuff together. Okay, 3, 2, 1, let's go.
You're an original, aren't you?
Cowboy.
I'll leave you there. I'll leave this video right there, guys. There's nothing else I can say. Peace out, everybody. Have a great night. Have a great day. Cheers, Ape Nation.
Bounty cutter. Bounty cutter.
Yeah. Oh, yeah. No, seriously, we really could. So one thing I want to